let's talk about 8 mortgage secrets that can help you close more deals. We all know a mortgage can make or break the deal, and most buyers have no idea which type of loan is actually best for them. Here's the truth. Even a great buyer can get stuck if their financing strategy isn't aligned with their goals. And the best agents, the ones who keep closing even in a high-rate market, are the ones who know how to guide that conversation with confidence. So in this video, we're breaking down 8 key mortgage strategies that every smart agent should understand, plus one bonus that's starting to show up on lenders' radar right now. Let's get into it. Secret number 1 is the power of the payment. Buyers don't buy the rate, they buy the payment. Often, even the price of the house is less important than that of the payment and the buyer's ability to make the payment. When you help clients see what their monthly payment actually looks like, it changes everything. It turns uncertainty into clarity. For example, let's talk about adjustable rate mortgages, or ARMs. They've come a long way, and for many buyers, they simply make sense. As of September 2025, a 5/1 ARM averages about 5.89%, a 7/1 ARM about 6.02%, and a 10/1 ARM around 6.15%. Compared to a 30-year fixed at 6.22%, that's roughly $270 less per month on a $400,000 loan. For buyers who plan to stay 5 to 7 years, that can be the difference between waiting and moving forward. You might say, instead of focusing on the rate, let's look at what your monthly payment actually feels like. Seeing that difference on paper helps buyers realize they can afford more home than they thought. Secret number 2 is a temporary buy-down that creates permanent confidence. A 2/1 or 3/2/1 buy-down can completely shift a buyer's mindset. These programs give buyers a lower payment for the first few years, helping them ease in while the seller or builder covers the cost. You can frame it like this. Would you rather reduce your price by $15,000 or use that same money to help the buyer lower their rate and actually get the deal done? Here's a quick hack. Keep a simple visual that compares a buy-down to a price reduction. It makes the value crystal clear in a listing presentation. Secret number 3. Creative financing isn't dead. There are more loan options available than many realize, and knowing them gives you real leverage. FHA loans, 3.5% down, credit scores starting at 580, and flexible ratios up to 50%. Try posting this mythbuster. Think you need 20% down to buy? Not true. FHA can get you in for 3.5%. VA loans, 0 down, no PMI, flexible credit, and they now close in about 45 days. Same as conventional. Perfect for veterans and active duty buyers. Renovation loans, FHA 203K and Fannie Mae Homestyle. Combine the purchase and the renovation into one loan. For example, buy the $300,000 fixer, roll in $100,000 for upgrades, and finance it all together. Assumable loans. Certain FHA, VA, and USDA loans can be transferred to a new buyer along with the seller's low rate. Keep the seller's 3% mortgage. Yes, really. Mortgage porting, an emerging concept. This one's rare in the US right now, but it's being discussed by several lenders. Mortgage porting allows a homeowner to transfer their existing low-rate mortgage to a new property and only finance the difference at today's rate. It's already common in Canada and the UK, and it might not be far off here. Imagine telling your clients, you could move and keep your 3.5% mortgage. Secret number 4. Credit strategy creates competitive advantage. A pre-approval isn't the finish line, it's the starting point. Helping your buyers improve their credit, even slightly, can save them thousands. Encourage your lender to run a credit readiness check early on. And don't overlook doctor and professional loans. These programs are designed for physicians, dentists, and attorneys who are just starting out. They often allow 0 to 5% down, no PMI, flexible DTI, and even count future income from a signed contract. Consider featuring these in a short LinkedIn video or reel titled, How New Doctors and Lawyers Are Buying Homes Before Their First Paycheck. Secret number 5. Navigating the appraisal conversation. A great agent prepares clients for the appraisal before it ever happens. Explain how it works, what can go wrong, and what you'll do if it comes in low. If it does, stay calm and say, let's look at concessions or rate credits before we touch the price. That calm leadership builds confidence and protects your transaction. Secret number 6. Know your lender personalities. You're only as strong as your lender team. Build your dream team. And maybe it's not all a one-stop shop, but perhaps several lenders. A conventional and jumbo expert. an FHA and VA specialist, and one creative problem solver for unique cases. For higher net worth clients, consider asset-based loans. These qualify buyers using assets instead of income, ideal for retirees or investors. Get with your lender partner so you're always on the same page. They'll keep you up to date on programs, caveats, and the small details that can make or break a deal. And remember, be the source of the source. Know what you're talking about when it comes to financing, programs, and changes in the market. That partnership gives you confidence and gives your clients trust in the process. Here's a best practice. Host quarterly lunch and learns with your lenders. It keeps relationships strong and your knowledge fresh. And of course, this information is for educational purposes only. Always encourage your clients to verify details and loan options directly with their preferred lender or mortgage professional. Secret number 7, educate to differentiate. Your knowledge is your marketing. Create short, simple videos or posts that answer common questions like, what's a 2-1 buy down? Or, why waiting for rates to drop might actually cost you more. When you're the one teaching, you become the trusted advisor. Always end your message with, want to know what your payment would look like in today's market? Send me a message and I'll show you. Secret number 8, the rate objection flip. When a buyer says, I'm waiting for rates to drop, stay calm and confident. You can gently respond with, so will everyone else. And when that happens, prices will jump and you'll be competing with 10 other offers. Then add, you marry the house, you date the rate. It's not pressure, it's perspective. Here's a helpful hack. Partner with a lender who offers a refinance readiness plan, so your buyers know they can refinance later with ease. Bonus secret number 9, become the local mortgage resource. Knowledge creates confidence, and confidence creates closings. Host a short mortgage Q&A, live on Zoom or right inside your community. Invite lenders to explain options like FHA, VA, ARMs, and assumables. Record it once, and you've got evergreen content you can repurpose all year long. Best practice. Give attendees a simple branded takeaway called Mortgage Options 101. It positions you as the educator who adds value. Great agents don't try to be lenders, but they do understand financing well enough to guide with confidence. When buyers are uncertain, your clarity gives them courage. And when other agents are confused, your professionalism wins the client. The more you understand these mortgage options, the more people you can help, and the more consistent your closings will become. Well, that is it. 8 secrets to get more deals won. You are the informed advisor. If this video helped you, go ahead and hit like, and make sure you're subscribed so you don't miss the next one. Every week, I share proven strategies to help real estate agents stay focused, build structure, and grow their business with confidence. See you in the next video. And remember, clarity creates confidence, and confidence creates closings.